What is up, ladies and gentlemen? Welcome to this week's edition of Tuesdays with Turbo. Even though it's not Tuesday and it's not 10:30, but still, we're doing a show anyway because I'm actually really excited about this one. If you remember back 2 weeks ago, we did home insurance myths, and then last week we did auto insurance myths. Well, I kind of wanted to keep something along the same lines, but kind of make it a little bit more interesting. But so we're gonna do some insurance trivia today, and this one's going to be more about home insurance. Okay, I'm gonna put some questions down here at the bottom, so feel free to answer, whether you're watching this live or you're watching this as a replay. So go ahead and let me know your thoughts on these, and of course I will give you the correct answers, but I'm not going to leave you hanging. But for those of you that do not know me, my name is Ryan Turbo Jackson. I am your insurance resource, and I do videos like this to help educate folks and let them know kind of exactly what they're buying, and if they need to talk to their agent regarding some holes in their coverages or take advantage of some new endorsements and whatnot. So and just remember, insurance is its own language, so let me help you. And as always, if this doesn't pertain to you, please feel free to share it on your timeline, because even though it doesn't pertain to you, it might pertain to someone else. And what I've learned in the past is if one person has a question, I guarantee someone else does too. So it might help your friends and family out as well. So let's get into this. Yes, this is our first. I'm going to try to make this a series because I think it's kind of cool. Some of these are going to be just random questions. Some of them are actually going to stem from actual claims examples. So it's going to be more of kind of like a real life type of situation. And I'm, like I said, this would be kind of a cool, maybe once a month type thing. So if you like this, go ahead and let me know down in the comments. But without further ado, let's get into the first question. Now I have 1, 2, 3, 4. I have 5 and 1 bonus question. So let me know how you do in the comments. So here is question number 1. I bought my home for $250,000. Why do I need $325,000 in coverage? Well, this is one of the questions we get so often when folks are buying a home, or even when folks are getting their renewals and they're seeing their dwelling coverage on their home policy increase. They're they're we'll get the response that there's no way my home is worth $325,000. There's no way. Well, this is the whole market market value versus replacement cost argument. Hold on one second. Excuse me, I didn't want to blow your eardrums out. But yeah, this is the standard, as old as time conversation when it revolves around market value versus replacement cost. And when we're, especially in a new home buying situation, your lender is going to want to see at least the least amount of coverage they want to see is to cover the loan amount. Anything above and beyond that, it is what it is. But when it comes to the actual insurance, the lender is going to want to see a policy written for replacement cost. And as we all know, everything costs more these days, whether it's, groceries, gas, everything is through the roof. And as we've all seen, if you've been to Home Depot or Menards, the price of materials is still quite expensive, as well as the labor to actually have things repaired or built. So that's kind of why this is, like I said, if you followed me for any amount of time, we've covered at great lengths the market value versus replacement cost scenario. So this is the kind of the thing that you kind of have to keep in mind whether you're purchasing a new home or your renewals coming up, and you do see that the dwelling coverage has increased. And keep in mind, it's not how much it cost. Not keep in mind, it's not what your home's worth. It's what the replacement cost. So, and again, replacement cost is if there, God forbid, there's a total loss, how much would it cost to rebuild that home? And what a lot of folks kind of don't think about in that equation is Say, for instance, there is a fire or a tornado. Someone's got to come remove all of that debris so that the new construction can take place, and that doesn't happen free either. So that is part of the replacement cost. So kind of keep that in mind as you kind of, especially this time of year, a lot of folks, their home policies are renewing, or whenever yours is. That's the reason why your dwelling costs, your dwelling coverage increases. Because let's be honest, if you don't have guaranteed home replacement cost, the endorsement on your home policy, you want that to increase as the cost of everything increases, because at the end of the day, you don't want to be shortchanged and have that the remaining amount come out of your pocket. So that is question 1. So let me know if you got that one right. On to question 2. What insurance covers my jewelry for theft? Now this is kind of this one's a little bit more in depth, because in every home let's start at the beginning. Your jewelry is considered personal property when it comes to your home policy. However, if you look on your policy documents, there's limits for certain things for theft. Whether it be coins, collectibles, silverware, jewelry, guns. And a lot of times we get the response, they're like, we don't have any of this stuff. Can we take that coverage off? And the answer to that is no. That's built into the home policy. So for theft, jewelry, and this is very, very company dependent. A lot of the companies we work with have a standard theft coverage for jewelry for up to $2,500. Now, I always suggest when we're talking about jewelry in particular, whether it's engagement rings, wedding bands, anything of great value, let's go ahead and schedule that on your home policy. Now, what does scheduling mean? Well, we've been through that as well, but just kind of a refresher. Scheduling means is that we're individually insuring an item. Like I said, whether it be rings, jewelry, watches, earrings, pendants, regardless of what piece of jewelry it is, we want to individually insure those. Now, what are the benefits of that? Well, the benefits of that is, as we've seen a lot of companies these days with the base deductible starting at $1,000. Now, years previous, we were able to write 500, and even years before that, 250, and I've even seen 100. So, as these deductibles increase, it's always important to kind of take a look and be like, all right, well, my wedding band is $5,000. If something were to happen to it, and like for theft, for instance, you'd have $2,500 worth of coverage from the base policy. So let's go ahead and individually insure that. And when we do that, again, some of the benefits are it removes that piece of jewelry from the personal property coverage, and it has its own coverage where we can set lower deductibles, sometimes 0 or 1,000 or 0 or 100, 250, whichever you prefer. And one of the major benefits is that with individually insuring a piece like this, it gives you coverage for mysterious disappearance, as well as theft, as well as fire, as well as any other peril you can think of. So it definitely gives you a little bit more meat on the bone, if you will. And now, obviously, one of the non-benefits is it does cost a little more. However, pennies on the dollar for what the actual item is worth. Now, when we do add pieces like this, and this doesn't just pertain to jewelry, if you have firearms, collectibles, anything like that, those can also be individually insured as well. But we would need appraisals that are less than 3 years old. So kind of keep that in mind. And if you do have items like this, make sure to talk to your agent and kind of have the conversation with him or her so that your jewelry is taken care of. And a lot of times these jewelry pieces are passed down from generation to generation. So, I mean, obviously, having a monetary value behind it helps the blow a little bit. But when it's sentimental, I mean, there really isn't anything you can do at that point. But at least monetarily, you would be covered. So let me know if you got that one, that question right. Question number 3. How does escrow work with my house insurance? And I actually had this situation pop up yesterday with a new client. They had reached out to me and wanted me to quote their home and auto, which I will get that to you today. But the home policy in particular had taken a drastic increase in premium, and I was able to not only A, get them better coverage, but B, save them quite a bit of money. And they're like, well, my policy doesn't renew for like 30 days. And she said, well, how does that work when it comes to, I escrow my payment, so my mortgage payment is my mortgage, my taxes, and my insurance. I said, well, it's a very easy process. It's a very easy process. And when it comes to that, if you are escrowing your insurance into your mortgage, I don't need any money down. I don't need to take a first payment. I don't need to take the whole payment. I don't need to take anything. And then once that policy is bound, the client can cancel their current home policy. That will alert their mortgage company that, hey, they've canceled their insurance. The new insurance company will bill the mortgage company. So it kind of all works in the background, and it's pretty easy, very, very kind of streamlined process. So don't be afraid to kind of take on or switch your home policy midterm when it comes to your mortgage. So, or not even your mortgage, but your current policy period. So that especially if you're escrowing, very, very easy. And a lot of times is very, very streamlined. And like I told this client, I said, we're saving you a pretty good chunk of money. Why not jump on it now? If we're going to save you money now, let's do this now. And she agreed. So it is a very, very easy process. So don't feel intimidated when it does come to that. Let's see, 1, 2, 3. This is question 4. Question 4. What are some things that my home insurance doesn't cover? Now we've kind of talked at kind of great lengths about the importance of having guaranteed home replacement cost and some other endorsements that help beef up that standard home policy. But what are some things across the board that home insurance does not cover? Well, the obvious number one is it does not cover maintenance. It doesn't cover normal wear and tear. That is number one. So if you don't upkeep your roof and your roof happens to be, 25 years old and a storm comes through, that's normal wear and tear. So keep that in mind. A home insurance policy is not a maintenance policy. So keep that in mind. Also, another big thing is flood. I did a whole kind of 3 or 4 videos concerning flood. And if you don't remember, flood is a flood situation, and it doesn't have to be by a lake or a river or anything like that. A flood situation is anytime you had water from the outside of your house coming in. We saw that here in town with a bunch of folks, unfortunately, that hadn't had water in their basement for years. Granted, we had a torrential downpour, and a lot of people's basements got wet. And again, that is a flood situation. It's not like because when people think of flood, they think of what happened in North Carolina, where there's a bunch of water, rivers overflowing, and that's not always the case. But that's what we think about whenever we hear flood. So flood situations are not covered. Sinkholes, not covered. Earthquakes, not covered. Nuclear disasters, not covered. Now, some companies, aside from the nuclear part, I don't know if there's any that do offer that coverage, but when it does come to earthquakes, sinkholes, and floods, there are either endorsements with some companies or separate policies you can purchase so that you can put that kind of worry to bed, if you will. All right, question number 5. Let me know in the comments how many of these you've gotten right, or if you have any questions on any of these, please feel free to let me know. Do I need a separate policy for my boat, or can it be added to my home policy? Now, this is a very company specific answer. There are some companies that require your boat be on a separate policy, but there are some that will allow us to add it to your home policy. Now, what are kind of the advantages, disadvantages of each one of those? Well, when it comes to adding it to your home policy, especially getting back to the whole escrow thing, um, you're when you pay your mortgage, you're paying at that point you'd be paying your home insurance and the boat insurance so that it's never late. There are some stipulations when it comes to this. Kind of the type of boat we're adding. If it is more than a certain feet or a certain value, or if it has living quarters on it, then something like that, that type of situation, we would definitely want to do a separate policy. And when it comes to those, most companies have, they would consider those yachts, whether it's a yacht or not. But that's what they consider if it's over a certain amount of feet value, or if it does have living quarters. But your standard run of the mill bass boat or pontoon boat, by all means, most of the companies that I work with will just allow us to put those on. But what's kind of the downfall of that, or the downside? Well, your home policy tends to be quite a bit more expensive than a standalone boat policy. So if there is a claim and your boat is on your home policy, you make a claim on the boat, that's going to take away the claims-free discount from your home policy. And that's a percentage. So the percentage discount on a larger premium is going to be a higher rate. So if you have $1,000 home policy compared to a $100 boat policy, we remove the 15%, or we remove the 15%, or I'm just using 15 as an example, the 15% claims-free discount. You're going to see a larger monetary increase on the larger premium as compared to the smaller premium. So convenience, yes, but when it comes to claims, can drive that home premium up higher than if you did have it on a separate policy. And one last thing too is that when it is on your home policy, it does share the liability limit on the home policy and doesn't have it standalone. So is there a right answer? It's personal preference, 100%. So, but like I said, some companies, I know like Allstate, State Farm, I believe, and a lot of those captive companies, even Citizens, when I worked with them, they required boats to be on their own policy, whereas companies like Auto Owners, Pioneer, I believe Frankenmuth, they will allow you to just add a boat to the home policy. So, and a lot of times when you do add it to the home policy, it is less expensive because, like I said, you're not paying for liability coverage twice. So, like I said, completely up to you, personal preference, or like I said, if you are with one of those companies that require it to be on its own policy, then it is what it is. It is what it is. All right. Well, this is our bonus question, ladies and gentlemen. Nope, that is not it. That is all the questions I have. That is all the questions I have. So, ladies and gentlemen, let me know how you did. And let me know if you do have any questions, because and the way to get a hold of me, you can comment on this video. You can shoot me a message right here on Facebook if you don't want to make it public. Or you can give me a call. This is our office number and my direct email. I'll go ahead and screenshot that. And that is episode 1 of our insurance trivia. Like I said, let me know how you guys and gals did. If you did get all 5, then wonderful. If not, well, that's kind of what I'm here for. So like I said, I plan on making this a kind of a series. So kind of keep your eyes peeled for the next one. Everyone have a great week, and I will see you next time.